Welcome to our video report. This is Ramesh Sigamani from Bravisa Temple Tree. The stock markets continue to go higher and higher, showing no concerns for any kind of negative news. The Sensex closed up 2% for the week, and our portfolio made a gain of 5.51% for the week. Record gains in 1 week, and that is the potential of being invested into equities. The three important news that took the markets up this week were: first one, core sector growth rebound. Core sector recorded 4.9% growth as against 3.1% recorded last year. Commercial vehicle sales along with passenger vehicles and tractor sales showed good growth numbers, and some of the banks have even reduced interest rates. What this means is industrial activity will pick up pace soon. The second news was RBI stays put on interest rates. RBI will not cut interest rates was known to the market. So when the news came out, it was not a surprise. Markets continued to keep moving up. While RBI also raised concern about the growth getting reduced to 6.7% as against 7.3%. This news should have shaken the market, but it didn't. When the expected outcome does not happen, what it means is the opposite of what is expected is likely to happen. Following this news was a booster shot to the economy. Government took immediate steps to bring down the slowing growth in the economy. Excise duty on petrol and diesel was reduced, and immediate brainstorming sessions were started to rationalize GST. Such news flows kept the market going higher, helping it to recover most of the losses that were made in the last 2 months. On Friday evening, there was a bonanza waiting for the Indian economy. Rolling back of RCM and refund to exporters, along with bringing down taxes on a number of products, ensured that Diwali comes early to stock investors in India. Sensex is expected to reach a new peak in the coming week. Thought for the week: falling interest rates. SBI has cut its interest rates to 6.5%. Soon, other banks are likely to follow suit. For a person who is in a 30% tax slab, after taxes, his FD returns will be net 4.35%. This will force a lot of FD investors to look for alternative investment products. Probably they would even be willing to take a little amount of risk because the situation has been forcing them. The stock markets have become the best place to invest these days, and it has already attracted huge FD money into the market. In this scenario, getting to know what is the risk that stock markets carry will help people to take a wise decision on their investments. On an assumption that FDs are kept for a longer period, we have taken a 5-year staying period for calculation purposes. On a 5-year rolling period, how the Sensex has fared. Sensex has been in existence for the past 38 years. In the 38-year period, we will get 34 instances of 5-year rolling period. Among the 34 instances, the maximum CAGR return was 53.07% and minimum was minus 4.77%, while the average among all the 34 instances was 16.73%. This rate's outcome is for the direct market investments, whereas there are products combining stocks with other investment assets to bring down the risk and give higher returns. The table here shows the returns of each product, their risk and the tax status. Please select a product that suits your risk appetite and help your savings have better growth. Would you have any clarifications on any of the options provided? Please feel free to call on us or write to us to our contacts. To sum it up, core sector growth rebounds. RBI stays put on interest rates, and booster shot for the economy keeps the market in high spirits. Diwali comes early to the market, and we expect Sensex to reach a new peak in the coming week. This is Ramesh Sigamani signing off. Thank you. Have a great day.